Hello, traders. It is Wednesday morning, April 2nd, and we've got some news pending. That's why the title for today's video is News. I might entitle it Good News or Bad News. We're going to have to wait and see, but in any event, news drives the market. And right now we're waiting for ADP to come out. This is the overnight session for the S&P 500. You can see how it's declining. While we wait, I want to make a couple of notes here. One is that I am going to be trying to get out pre-open market shorts, very short 3-minute video. Since I'm doing a video on Sunday and I'm giving you what to look for Monday morning, I think I'm probably going to do one Tuesday morning. Wednesdays, I'll try and get a video out before the open. It'll be a little bit longer. Then on Thursday and Friday, I'll try and do 2 more shorts just to give you the best setup for the day. So please make sure to subscribe to my YouTube channel. Turn on your notifications so that you don't miss these videos. It's going to help you plan your trading day. And so I'm going to be looking at the longer term market context, and I'm going to be taking a look at what the overnight move is and how we should structure our game plan for that day. We need to know what scenarios are possible, which ones are most likely, and which ones favor us. Those are all 3 different scenarios. So you can see ADP is coming out right now. We're going to take a look at that number. I don't know that ADP is going to be a big market driver unless we see a lot of job losses in the private sector. So I'm going to take a look at the number and let's see where it came out. 155,000. That's actually quite bullish. 77,000 was the last reading. 118,000 is what was expected. So 155,000 is pretty dang good for the jobs backdrop. We've also seen initial jobless claims coming in around the 220,000 range. So they've been relatively unchanged. That bodes well for Friday's unemployment report. By the way, Friday morning, I'm going to be joining Dan Inskeep. Daniel's one of our members in the chat room, but he also does live S&P 500 trading every day. He's getting some really pretty good skills. So I thought I would join him Friday morning and see if we can trade some futures. I'm not a big futures trader because there's a much greater edge in trading underlying stocks. But there are some days when you have lots of volume, key market levels, big news, where you get sustained directional movement, and that's when I like to trade S&P 500. We'll see if we get that set up on Friday. So in the link of this description, you're going to see how to access that live event. By the way, today, Harry, who leads my chat room, he's going to be doing a live event on X. So I'll make sure and include that link as well. So you can see that the overnight price action was to drift lower, and the market really hasn't reacted much to that favorable ADP number. Jobs is good for economic growth. We need jobs. So on the job scene, everything seems to be going pretty well. But the one thing I've been watching with regards to labor is the participation rate and also the average hourly work week. As that average hourly work week comes in, it tells us that employers are getting closer and closer to layoffs, because the first thing that they would prefer to do is to reduce someone's hours before they actually lay them off. So that's something I've been keeping an eye on. And obviously, hourly wages are really important because that's the largest input cost for manufacturers. And if wages are going up, it's going to be inflationary. And we did see that yesterday in the ISM manufacturing number that came out. So we did see that the price component was starting to increase. That's going to keep the Fed higher for longer. They're not going to be lowering interest rates. And we're already seeing the impact that higher interest rates are having on consumption. We're hearing it from all the retailers. And I believe over the course of the next 2 weeks, which earnings season actually kicks off a week from Friday, I think earnings season is going to be the catalyst for the market's next leg lower. And I think that forward guidance is going to be very soft. There's lots of uncertainty. We've got the Trump tariffs going into effect today. It's Liberation Day. So we're going to be finding out exactly what those tariffs are. To a large degree, I'm expecting that that news is already priced into the market. But hey, they're subject to change. Okay, so the tariffs might start out really high and then they get eased over time, especially if there are kind of some strings attached, like border security, because Trump is using the tariffs to actually have political change between different countries as much as he is to punish them for charging tariffs on our products. So we'll see. I think there's flexibility in terms of how rigid those tariffs are, and they could change over time. So I'm trying not to get too wrapped up in the tariffs, to be quite honest with you. I feel that the backdrop has been there with or without the tariffs. We've seen global economic conditions continuing to slide. This has been going on for well over 6 months, closer to a year and a half, actually, if you consider China and Europe. So you've got weak global growth, and now that's starting to spread over into the United States. And so tariffs or no tariffs, that was something that was happening. Credit conditions, we haven't seen credit this high ever, and it spans everything. Okay, it's not just the consumer, it's municipalities, it's states, it's sovereigns. You've got governments across the globe. All of them are needing to go through some type of austerity program, and you're starting to see cutbacks. Well, with the US right now, cutting all those government jobs is going to weigh on economic activity because those people don't have jobs. They're not spending money. So it all starts to feed into itself, but credit is a really big concern. So enough fundamental analysis. Yes, we've got the jobs report coming out on Friday. That's going to be a really big piece of information. I don't think it's going to move the market very much personally. And I think, if anything, it probably keeps the Fed higher for longer. So let's take a look at the market. Let's see what's been happening recently. Let's review my last pick, which was LULU. And in the context of what the market has been doing, we'll take a look at that 30-minute chart. We'll see what the market's been doing. Now, let's go 15-minute. That'll still capture it. So this is what the market's been doing. This is Friday's price action, and this was the open on Monday. So market gaps down Monday, and look, it's been rallying the whole time. It's rallied from basically about, let's say 547 up to 562. Folks, that is a huge market rally. We're talking a lot of S&P points here. So Lululemon, you're probably thinking it didn't do too well. Actually, it did quite well. And if we go into the 15-minute chart, you can see, actually, we'll go 5-minute because that'll give us more granularity. This is the price action on Friday. Very weak reaction to their earnings announcement. Another case in point, they lowered their guidance. Their numbers were actually good for this quarter, but they lowered their earnings guidance. So market didn't like that news. Stock sold off dramatically. And you can see how right in here, I believe it's down about $10 from the opening Monday. So it's been gradually drifting lower. If we had any help from the market, this stock would have moved much better to the downside. But you can see the advantage of trading relative strength and relative weakness. This stock has continued to slide even when the futures are up somewhere around 150 points in the last 2 days. So yes, I still like LU as a short here. Market is starting to bounce a little bit. This big gap down, you had a nice rally and it closed near the high. Yesterday, we had some pretty good movement both ways. So we saw a nice rally early in the day and a drop. So I'm going to talk a little bit about how you should be day trading this. Swing trading, no brainer. you should be short. You should be looking to add to short positions. So here we've got this test of a major support level that was established 2 weeks ago, and we tested that Monday morning. So we got this big market gap down to that support level, and we rallied off of it the entire day. So this support level could get some people thinking, hey, double bottom. We could really rally up here. Maybe this was the confirmation that we needed off of that support level. And certainly that is possible, but I think it's unlikely. Why? Because you can see that after we had this first initial bounce here, if buyers were super aggressive, go, gotta have it, they would be in here buying, and we would not have rested at the 200-day moving average. This move here was very choppy, very bouncy, overlapping candles, gappy. And as soon as we get to the 200-day moving average, we don't spend time above it. We don't start floating up to 585, not even close. Wham! I mean, they come in and they nail this market hard. This would not have happened, and a retest of this support level would not have been this easy if buyers were aggressive. They're not aggressive. And this was the tell. What would we have seen if buyers were aggressive? I've already talked about one instance where you get almost a V-type bottom where you start stacking green candles above the 200-day moving average. That would be one form of support, and that would also indicate that buyers are very aggressive. What would be another method? Well, you get one long red candle that rejects off the 200-day moving average, and then you get a couple of dojis in here, and you start seeing the market really struggle to decline. That would be a sign that buyers are interested. And then whoosh, now you get through the 200-day moving average with ease on long stack green candles, and you have a higher low double bottom. That would also be a really nice sign of support. But what you get is blam, right down to that horizontal support level. I believe that this is just another bounce. This move happened very, very quickly in a matter of 4 days. Look, from all the way at 576 down to 546. That is a 300-point S&P move in 4 days. Come on, folks. You think that's going to continue? It can't continue, but it was fast and it was deep, and that tells you that sellers are aggressive. So you get this little bounce in here. We preserve half of this long red candle. We'd still like to see that. What else am I looking for? I want to see a VWAP Q preserved today. And you can see that's the green line. It comes into play around 564. So I don't want to see a big rally today into the tariff news because I am short on a longer-term swing basis. Longer-term swing basis, you should be short weak stocks, and you should be looking to add to those positions on market bounces. You do not need to chase. I included that information in my Sunday video, and I had mentioned that if we get a big drop down like this, you do not want to chase after a steep move like that. So you wait, you get this bounce starts to run out of steam. Now you know it's time to consider adding to your bearish short positions for longer term swing trades. So how do we day trade this? Well, we start looking at this halfway point and AVWAP Q. We've also got the market down overnight, not down considerably. We'll take a look at that price level. So the open yesterday was 557.45, and the price level right now is below that point. And you can see the market's continuing to decline on that weak ADP number. And now we've got a chance to possibly even test the low from yesterday. So what I always like to do is I always like to set alerts. Alerts are fantastic. So now you're getting follow through selling. What would be our best case scenario today? Well, we don't like to chase the market. And I feel like a strong ADP number is not necessarily a reason for the market to sell off. Hey, people have jobs. That is a good thing. It's the tariffs. The tariffs is what has the market spooked right now and the potential for a global trade war. So that's what the market is concerned with right now. And I feel that given that that news is going to come out today after the close, we've got a chance for the market to put in a fairly weak day. So what I would like to see is we're below this support level from yesterday. I would like to see a wimpy attempt to try and rally the market. Okay, so we get mixed overlapping candles. Let's take this extended hours off so that I can show you what I'm talking about. A move of this nature would be okay. All right, I'd prefer a little grind higher, more overlapping candles, which, by the way, these 4 candles stacked like this off of the low into the gap told me that we were going to see a move higher yesterday. They came on good volume. So that was the tell yesterday. But I'm looking for a very stubborn move. Just tries to move higher and just can't. So we don't get these 4 nice green stack candles in here. We've got a green, a red, a green, a red, and the market tries to fill in the gap. And you know what traders are going to remember today? They're going to remember, hey, yesterday, the market gapped down and then it rallied the whole day. Maybe that's going to happen again today because we're on that support. We've got that double bottom support forming now. Yeah, that's what's going to happen. So they come in and they start buying early as it looks like we're going to fill any overnight gap that we have this morning. And then you start to see resistance, 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 and we start to leak and roll over. The reason I would prefer that setup for shorting is that I get to evaluate the height of the market bounce. How much of the gap did it fill in? And I get to evaluate weak stocks. So what I want is a stock that's ticking lower when the market tries to rebound, tries to bounce into the gap. And when that market bounce starts to stall and roll over, I already know these other stocks are definitely demonstrating relative weakness to me because they're ticking lower when the market is ticking higher. If they've broken key horizontal support or major moving averages, that's going to make them an even better prospect. So if you got that volume and you have that technical breakdown, fantastic. Market is trying to bounce after a gap down. That tells me the gap itself is telling me there's overnight weakness. The bounce is wimpy with mixed overlapping candles. Awesome. That tells me that that first move is probably not going to be a great one. It's going to be one that I want to fade when it shows resistance. And now I already have my great stock picked up that's been leaking oil and ticking lower when the market's been going up. As soon as the market crests and it can't get any higher, I'm going to start shorting that stock. When the market rolls over, I'm going to add to that short position. That's how I would be approaching my day trades today. So the best setup, given the overnight price action with the market moving lower, is that little tiny bounce after the open that moves into the gap, but not very much. I'd like to have half of a gap preserved, okay? So I don't want to recover most of it. And when I do recover it, I want it to be very gradual and very difficult. Every little move higher is challenged. So that's what I'll be looking for. And let me see if I can pull up a custom search that I did. It had a nice stock in it, so we're going to focus on that. And look, only 2 stocks. In fact, one of them is an ETF. If I had no ETFs marked on my search, I've only got 1 stock to look at. Well, what did I use for my variables? Well, I want relative weakness on a D1 basis. And I'd like to have a bearish trade signal. I went with a D1 basis and an H1 basis. Why did I choose those longer time frames? Well, first of all, because I'm trying to give you swing trades, not just day trades. I want something that looks good on a swing basis. And this tells me that on those longer term time frames, the stock is bearish. Why else am I using longer time frames? Because the market's so damn choppy right now. Look at this. I mean, it's been all over the board. Well, I want a stock that's been bearish, 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 bearish on a longer term basis. So I'm going to focus on the longer term price action of the stock versus focusing on the shorter term price action. So I just marked no ETFs. I want good option liquidity, of course. I'd like to trade options if I can. Looking for an expensive stock, $50 or higher. I tend not to like to trade cheap stocks because I want lots of price movement. And then I want a stock that was below the prior day's low yesterday. And this is my list. Merck, one little stock. Okay, well, this will be a pretty easy search to go through. So as we take a look at that, I want to also reinforce another concept. You have to know what you're looking for. What am I looking for? What would be a good setup? The market was up yesterday. The market closed above the prior day's high. Okay, what would be a good setup? How about a stock that closed below the prior day's low? Oh, market closes above the prior day's high. This critter closes below the prior day's low. Wow. On a market rally day, that stock must be really weak. Yeah, it must be. And it was. You can see it drifting down the entire day, taking out prior day's low. This was beautiful. Look at that volume. Nice. And there we've got a long-term downtrend. We've got a stock that breached AVWAP-E, incidentally. Look at how nice AVWAP-E works. Long red candle, and look where the stock rested 2 days ago, just below AVWAP-E. So now, yesterday, we have an up market. And what does stock do? Let's overlay the S&P 500. That's the S&P 500. Stock leaks oil early. Market has a massive bounce off of the low. What did the stock do? Couldn't even recover that gap down. Still way below the prior day's close. Struggles to even get through VWAP. And there we go. Right down. This is such an easy short when the market started to put in a high in here and it was leaking oil. You could have taken it right here at the low of the day if you wanted to be relatively passive. But for me, this is not able to get through this high. Even with the market moving higher, you're leaking below VWAP. I would have shorted it here. Would not have had a problem with it because I didn't feel that the market was off to the races and going to continue to move higher. I felt we're going to get a choppy back and forth type of day ahead of major news. And that's the type of price action actually that you can probably expect today as well, because we're getting lots of news tonight. You got sellers are in control, buyers are in control. Sellers are in control, buyers are in control. Nobody knows how this is going to play out. So I'm kind of expecting that you're not going to see one-sided directional movement. There might be fear of what the tariffs could be, but I've heard some people also say, hey, maybe they're not going to be as bad as we expect because Trump is starting to see some economic weakness. So maybe he'll throttle back on all the tariffs initially and then increase them over time as economic conditions start to stabilize. Okay, well, I don't really care. I'm not trying to guess what the tariffs are going to be or aren't going to be. I only know that buyers and sellers are having some say here at a very critical technical support level. So that's what I'm going to go with, is that you're going to see two-sided price action. And that is why I would not chase a down open that is a gap and go. There's just not enough news to justify a free fall in the market right now on news that is pending. Okay, so market sells off early and continues to go lower today. Merck looks weak. Don't bite on that. Do not bite on that. There's no sense of urgency like that for day trades. Okay, so you've got to pick your points. Even if the market sells off hard initially and you get a big steep decline with stacked red candles, that just means you're going to get a decent bounce off of that low. When you get that bounce off of the low, you're going to rest below VWAP. You'll always have another opportunity to get in. That bounce off of that low is going to be your opportunity. But I just don't see this morning that all of a sudden everything's going to fall apart and we're going to take out this 550 level, especially since the ADP number was pretty dang good. So it was not cause for concern. So be cautious on the open today. Do not chase a gap and go lower. Our best case scenario is we've seen some overnight weakness. We've got some nervous jitters. We want to see a nice little bounce into the overnight gap. And then when that bounce starts to stall out and we've preserved half of that gap, that's when we want to start looking for some shorts. We want to find stocks that did not participate in that bounce, and that's going to be our sign that they are weak relative to the overall market. Merck, I think, is going to be a really great stock for you to take a look at. Very bearish. I like it longer term on a short basis, and I'm bearish the market on a longer term basis as well. So we just have to wait for these bounces to run out of steam. And then we've got earnings season coming up. As I mentioned, I think earnings guidance in the next 3 weeks or so is going to be the catalyst. And I think you're going to see a lot of companies being very, very cautious into Q2. Why? Because every company that's recently reported has cited weakness ahead. Thanks so much for watching. Again, a couple of recaps. I'm going to try and do very quick shorts tomorrow morning, Thursday morning, and Friday morning. So watch for those. Subscribe to the YouTube channel. Turn on your notifications. I'm going to be doing a live event with Daniel Inskeep. I'll have a link for that in the description of this video. And then I'll also have a link to Harry's X live event that he's going to be holding today. Harry runs my chat room. He's awesome, an awesome trader, and he's super entertaining to listen to. So you're going to learn a lot, and you're going to have fun listening to his live event. Thanks so much for watching, everyone. Trade well. We will see you tomorrow morning.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.